Welcome back to DG Tutorials. Let's break down interest in the simplest way possible, stripping away the jargon and focusing on the core concept. We'll use everyday examples to illustrate how it works, so you can grasp the fundamentals quickly and easily. Imagine you lend your friend $20, perhaps to help them out in a pinch, and after an agreed-upon time, he pays you back $21. That extra dollar? That's interest. A fee for borrowing money. It's the cost your friend pays for the convenience of using your funds for a period. Now let's flip the script. When you put money in a savings account, you're essentially lending it to the bank. You're trusting them to hold and manage your funds. They use it for various investments and loans, and in return, they pay you interest as a thank you. It's their way of compensating you for allowing them to use your money. So interest is both the cost of borrowing, when you're the one taking out a loan, and a reward for saving, when you're the one providing the funds. Here's the magic. The real power of interest lies in compounding. Your money earns more money, and then that extra money also starts earning money. It's a snowball effect just by sitting in the right place like a high-yield savings account. Think of every dollar you save, no matter how small, as a tiny employee, diligently working behind the scenes, working to bring back more dollars, contributing to your financial growth. The more you save, consistently adding to your principal, and the higher the interest rate you secure, the more your money grows, exponentially over time. This isn't a get-rich-quick scheme. There are no guarantees of overnight success. It's a proven, steady way to build wealth, a marathon, not a sprint. You don't need a finance degree or specialized knowledge. Banks compete to pay you for your savings, offering various interest rates to attract your business. High-yield savings accounts, offering significantly better returns, and similar products are available to almost everyone, regardless of their background or financial expertise. The only real barrier, the thing holding most people back, is knowing to take that first step, to actively seek out better options. Move your money from a zero-interest account, where it's simply stagnating, to one that pays interest even a little bit, and you're already ahead of the game. It's that easy. A simple transfer, a few clicks, your money starts working for you, generating passive income while you sleep. Interest is the engine of personal finance, the driving force behind wealth accumulation. Understanding it, and harnessing its power, is your first step toward financial independence and a more secure future. The best part about earning interest, it's passive. Your money grows 24/7, even while you sleep. Unlike a job, interest income doesn't require your time. Just your savings and a good rate. It helps fight inflation, so your money keeps its value. A growing savings account is a safety net, giving you peace of mind for life's surprises. Watching your balance grow motivates you to save even more. Now let's talk about the real game changer, the financial concept that can truly transform your future and set you on the path to long-term wealth accumulation. It's called compound interest. This powerful principle is the cornerstone of wealth creation for savvy investors. Simple interest pays you only on your original deposit. It's a straightforward calculation based solely on the principal amount. It's predictable but slow. The growth is linear and doesn't accelerate over time. Compound interest, on the other hand, pays you on your deposit and on the interest you've already earned. This is where the magic truly happens. That's interest on interest, a virtuous cycle of growth. In essence, your money snowballs, gaining momentum and size as time goes on. For example, let's say you invest $1,000 at 5% simple interest. After 30 long years, that initial investment grows to $2,500. But with compound interest, reinvesting the earned interest, that same $1,000 grows to over $4,300 in the same time period. That's nearly double the return, just by letting your interest earn more interest, creating a powerful cycle of wealth accumulation. The growth starts slow and may seem insignificant at first, but over time, it accelerates exponentially, transforming modest savings into substantial wealth. This is how fortunes are built, patiently and strategically. It's achieved by letting your money work for you, year after year, generating passive income and building a secure financial future. The difference between simple and compound interest, when viewed over the long term, is massive over decades, often amounting to hundreds of thousands or even millions of dollars. Therefore, always prioritize and choose accounts that offer compound interest. It's the most powerful tool available for building wealth and achieving financial independence. Don't underestimate the profound effect of time. Time is your greatest ally when combined with the power of compounding. Start early, even with small amounts. and let the snowball roll, gaining size and speed as the years pass. Compound interest is your secret weapon, the key to unlocking long-term financial success and security. Time is your biggest advantage when it comes to investing. It's the one resource you can't get back, so leveraging it early is crucial. Start saving and investing early, even if it seems like a small amount at first. Because compounding does the heavy lifting over the long run. It's like planting a tree. The sooner you plant it, the taller it grows. Let's look at an example. Take Anna and Ben. Anna invests $200/month from age 25 to 35, then stops completely. She invests for only 10 years. Ben, on the other hand, starts at 35 and invests $200/month until he's 65. He invests for a full 30 years. Surprisingly, Anna invests less overall, but ends up with more. Over $310,000 versus Ben's $295,000. That's a significant difference. Why is this the case? Because Anna's money had more time to grow and benefit from the power of compounding. The earlier you start, even with small contributions, the more powerful compounding becomes over time. Even small amounts consistently invested add up significantly over the decades. So, don't wait for a bigger paycheck or a perfect moment. Start now, with whatever you have available. The habit of saving and the head start you gain matter far more than the initial amount you invest. Your future self will undoubtedly thank you for the sacrifices and smart decisions you make today. Ready to put this into action? Open a high-yield savings account. Don't leave your money in a zero-interest account. Online banks offer much better rates and your money is FDIC insured. Build an emergency fund of 3-6 months expenses in this account. Next, invest for the long term. Contribute to a 401k or IRA, especially if your employer matches contributions. Use simple, diversified funds like index funds, no need to pick stocks. Automate your savings and investments every payday. Start small, stay consistent, and let compound interest do the work. Thank you for watching this video. Hope you find this information on finance useful. Please share with your peers. Have a great summer. See you in the next school year.